It's just a huge honor for me today to be podcasting and interviewing Chris Kamin. Thank you so much for coming by the house today.
Thank you.
So you live in the foothills. So if you're in the foothills, you're not going to listen to talk radio all the way to work and listen to commercials and songs and all that. So they're going to iTunes and Googling Ahwatukee, and we're the only show. So the reason you're a star today is because we're the only show in Ahwatukee. And I wanted to bring you in here because I'm trying to get the pillars of the community to talk all things Ahwatukee. And let me read your bio. You're at the 48th Street in Chandler by LA Fitness, Tukeetown, and you're a Farm Bureau. You're an associate manager agent at Farm Bureau Financial Services. And by the way, none of these are paid commercials. No one's paid me to come on the show. I haven't paid anybody to come on the show. I just want to get the pillars of the community, people who live and work in Ahwatukee. And Chris moved out to Arizona in 1996 from Chicago because he hated the Bears and wanted to be a Cardinals fan. Is that correct?
Well, that's correct.
And purchased his first home in Ahwatukee in December of 1998. Chris and his wife have 2 children, ages 10 and 7. Like many from the Midwest, he moved out here for the weather. Chris played professional golf until the end of 2012 and spent years traveling the world in search of his fortune. While he never reached the level of Tiger Woods, he played with him and competed on the PGA Tour, Nationwide Tour, the Asian Tour, among many other stops along the way. On the advice of his father-in-law, he entered the insurance field almost 5 years ago and is happy with his career. You played with Tiger Woods?
I have.
Gosh darn, a lion would never drink and drive, but a tiger would. So what was it like playing with Tiger Woods?
It was a long time ago. I had hair.
You had hair
back then. But he was, even back then, he was so much better than everybody else. He was a man among boys back then.
A man among boys.
Mm-hmm.
That's cool. You know, and there's a big golf legacy in Arizona. Ping was started here.
Mm-hmm.
And then the guy from GoDaddy started a golf.
Bob Parsons.
Bob Parsons. He started
PXG Golf a couple of years ago.
PXG Golf.
Mm-hmm.
So PXG. I do P90X in my garage with Ryan, but I don't know what P90X stands for. But what does PXG stand for?
Parsons Extreme Golf is the acronym.
Parsons Extreme. So do you think that Arizona is extreme golf, obviously just because of the weather?
I moved here for the weather. You know, when you're going to play, it's either Florida or Arizona, and I don't like the humidity. But it's a great place for golf. It's a great place to live. And we've been in Ahwatukee almost 20 years. Because
20 years?
First time we came down here, a friend of ours who worked at Ping bought a house at the foothills and drove my wife and I around. And I remember going down Chandler over the hill towards Club West for the first time and, taking in that view and going, this is great. I think I could live here.
So so what do you call those two? We had 4 golf courses and the lakes went under,
mm-hmm.
but in the foothills it's just the foothills golf course and then Club West.
Mm-hmm.
So you know what the foothills course is?
Yes.
You know that first house right next to the course? You pass the last house on foothills on
mm-hmm.
Club West and pull in.
Mm-hmm.
That's where Ryan was born. All 4 of my boys were born in that house.
No kidding.
And it was so awesome because every Friday or Saturday night they'd have some kind of wedding or some kind of deal there. And my boys were like, 2, 4, 6, and 8. And one of them come back with like a cupcake or a muffin. And they, where'd you get that? And they're having a party. And it's so funny because little boys aren't noticed.
Mm-hmm.
So the all adults, whether they're having a wedding, whatever the function is, when 4 little kids run up to the bar and they all take a piece of cake, no one questions it. So they really enjoyed living on the golf course. So then you bought a house in Ahwatukee, mm-hmm. and then after you quit the PGA, or you decided to go into Farm Bureau Financial Services.
Yeah. Like I said, you read in my bio. I mean, I played, and I got to play with all of the famous guys you see on TV. I just never quite took that last step to stay out there. I made it out there, but didn't quite stay. And after years and years of just putting everything into it, I think that candle kind of burned out, and I lost some of the desire to get out and practice and put the work in and be away and travel and all that went into it. And I always remember in the back of my head my father-in-law saying, because my father-in-law had his own business. He was from Illinois, he had a machine shop, sold parts to John Deere and other manufacturers in that area. And having your own business is kind of like being a parent. You're responsible for yourself plus everybody else, and the stuff to go with it. And I remember him saying a few times that, if he could do it over again, he thought insurance would be good. He had some friends in it, stable income, did a lot of good things in the community, helped people. He got to be home at a regular hour, kind of some of those things. And so when I was sort of switching careers, it was either going to be college coaching, which is what I thought I would do, or I kept coming back to this, and I talked to some people that were in it, and just decided that, I was going to go ahead and pursue that. So.
It's tough with the name Farm because you got State Farm, you got Farmers Insurance, and your Farm Bureau Financial Services. How do you keep all the farms together in your mind?
Well, I don't have to. The clients, I guess the clients sometimes will call in and go, yeah, my dad has farmers. And I'm like, well, we're Farm Bureau, but we're happy to help. And a lot of insurance in this country started, not to give a history lesson or get off topic,
No,
but
give
a
it
lot
history.
of it.
They're commuting 1 hour. The reason the show's an hour
Mhm.
is because it's an hour from the foothills of downtown Phoenix.
But a lot of insurance started 100, 150 years ago to protect farmers. That's where a lot of this came from, was to, if they lost a crop, how is that going to affect the community, the farmers, the landowners, the banks, all those kind of people. So insurance was sort of put in place back then to really protect communities. And so a lot of companies, nationwide insurance was the Ohio Farm Bureau. There's a Farm Bureau in almost every county in the country. Farm Bureau Financial Services is an insurance company owned by, or the part that I work for is owned by the Farm Bureau from the P&C side. Life insurance company is its own separate company. But State Farm, I believe, had a part with the Illinois Farm Bureau back in the day. Country, I believe, was part of the New Jersey Farm Bureau, 100 plus years ago. So many of the companies got their start through farming and agriculture insurance, and then it developed and grown and gone to specific areas off of that.
Well, it really involves the community. I mean, we just learned yesterday that all of Napa is burned down.
I was there, as crazy it was, last week. I came back from vacation with my wife. It was our anniversary. We went up to San Francisco. We were drinking wine.
How many years?
20.
Oh my God, if you would have killed her on the first date, you'd be getting out of jail now.
Well, luckily that didn't happen. But we went up to, we were in Santa Rosa Saturday night, and we spent the night there at a hotel and drove up to Heidelberg Sunday morning, spent most of the day there, and drove back into San Francisco that afternoon, and woke up Monday morning and saw the news at the hotel of, there's fires and Napa's burning, Sonoma County's burning, Santa Rosa's getting destroyed, and it's like, is this real? Is this a joke? This is one of those things, but we were there. We smelled the fires.
What caused the fire?
They weren't sure. We heard that with some of the winds that blew down some power lines, which sparked, and we were even amazed at one of the questions we asked at the winery was, when's the last time it rained? Because everything was so dry. It was so dry, and it was very calm winds. It was a beautiful day, but we heard there were 50-mile-an-hour winds that evening, and the fire spread so fast and it destroyed so much. It was surreal. We're not even sure if the hotel we stayed in is still there in Santa Rosa.
Well, the news said today that basically Napa is gone.
I mean, it's going to take years and years to recover.
And they said most of those wine vineyards were planted like a century ago.
They'll, like most things, it will heal. It will take time, and it was surprising. I mean,
So how long have you been doing insurance now?
Almost 5 years.
So in 5 years, what percent do you think of those vineyards were all insured and covered their business and their lands and their?
Well, I hope all of them are.
I know, but what percent in your gut tells you they are?
Insured and then insured properly,
Right.
are two different things.
Everybody thinks they have great health insurance until they get pancreatic cancer. Then they find out that they didn't get such good insurance.
What gives insurance a bad name is when people look at it as coverage and price. Okay, there's really two parts to it. It's how well claims are handled. Okay, when you need it. What's the point of insurance if it doesn't pay out? Okay, insurance is a very simple product. You pay a premium, the risk is transferred to an insurance company. Okay. The question of the premium is always based on 2 or 3 different factors, but the coverage that you shift to the insurance company is very, very simple. You sign a contract. they have a reserve set aside when you sign that contract to pay your claims. The question is always, does the client, whether it's a winery, whether it's a different kind of business owner, a homeowner, or a renter, do they understand what they purchased? Okay, and unfortunately, sometimes what you see on TV is a similar theme on advertisements, which is that if you don't have the least expensive insurance product that you can buy, you have a bad company you're working with. Where the biggest thing that should be, the biggest factor should be, do you have the coverage in place when you need it? Because then you just said, having health insurance, whether you have the greatest or the worst, if it's going to cover you for treatments when you need it, is all that matters. And so, getting back to your original question of do they have, what percentage of people have insurance on those wineries? They probably all do. At least 95%, if not 100%, have coverage. The question will be at claims time, what did they purchase? What were the line items? What did they exclude to save money? Or what did they pay to have extra coverages for? I have seen fires on my own properties I've insured, apartment buildings, for instance. When you get the phone call as an agent that, hey, Chris, we've had a fire. Okay. Last night, what happened? Well, we don't know. Is everybody okay? We don't know. We're going out there. We just heard about this. It's the scariest thing there is, and it's the farthest thing from price, and it's the farthest thing from funny commercials, and it's the farthest thing from anything other than, please God, let me make sure that I've done my job correctly, okay? Because the last thing I want on my conscience is that I sold somebody something on the cheap to save them money to make a sale rather than giving them what they needed. And when you go through that, you know, these companies, these agents that have insured these vineyards and these properties up in Northern California, or in Southern California as well. Anaheim's on fire too right now. You know, where we truly have a benefit is when there is a claim, when there is an issue, there is a catastrophe, a disaster. That we've done the proper planning, we've explained to the client thoroughly and clearly what coverages they have, what they don't, if they want to purchase those extra coverages, do they think they will need them, do they want to transfer the risk to us, or do they want to self-insure and take on, I'm okay for this, but give me the biggest thing. And we always start by asking your client is, what concerns you? You have a dental practice, among other businesses. What is your biggest concern, or what are your two biggest concerns? And the client will usually tell you that I'm really worried about this, and this, and this. And then, okay, after those, then it's, well, I don't know, maybe, okay, so we've hit the biggest things they're worried about. My job then is to make sure those are covered so they can have that worry off their plate. They have enough things to do as a business owner already, besides worry about insurance. Then it's my job to point out areas where maybe they're not thinking that they have a risk, okay, or there's some issues that we need to manage for them potentially, whether it's with employment liability, which is, you know, all the new laws that come into effect, the minimum wage, and then the paid time off, and the vacation, the sick calls, and things that go on now with the new minimum wage laws in Arizona, making sure they understand that and their liabilities that they have to take care of their employees. The cybersecurity risk, you know, you see all the days of the hacking of the computers. I mean, if Equifax was hacked, all, you know, the responsibility that you have as a business owner if you're taking patients' information, the medical records, making sure you're keeping that safe and secure. So there's all the things that we think about from the industry side of where are risks that they have. And then really, if we've done our job properly and explained to the client what their risks are, they have a pretty good handle on it. They have an understanding of what their insurance is going to do, what it's not going to do when we get that call. They already kind of know what's covered and what's not. And so then it's really up to how well does the company handle their claims. Okay, and I'm thankful for Farm Bureau. They do a pretty good job. Back before podcasts and Yelp and Facebook and things like that, there was this thing called Consumer Reports that people used to read and get, you know, what was considered a very even-handed, honest review of products and services. And we were always ranked in the top 5 of the industry for claims and satisfaction with our clients. So, and I've seen firsthand from fires, and I've seen firsthand from accidents, and I've seen firsthand from deaths. We do a very good job of taking care of the clients when they need us.
So where's Farm Bureau headquarters?
Des Moines, Iowa, like many insurance
It's
companies.
pronounced Des Moines.
Des Moines.
It's funny. I went to Creighton University, and whenever we drive to Chicago, we'd always pull up to the first McDonald's in Des Moines. We'd pull up the window, and they'd say, "May I take your order?" We go, "How much further is it to Des Moines?" And they'd say, "It's Des Moines, and you're here." So it's in Des Moines, Iowa. So you've been doing this for 5 years in Ahwatukee. So let's bring it back down to Ahwatukee. What are you doing in Ahwatukee? I mean, what are you insuring? Is it business? Is it personals? What are your products? Is it life insurance, health insurance, business?
We do a little bit of everything. I've got one staff person, DJ, my office manager that works with me. We've got another agent, Dave. We have another agent.
DJ and Dave?
DJ and Dave. Another agent, soon to be an agent named Ashley, who's going to be coming on hopefully December or January in our office. But
So you're growing.
we're growing.
Nice.
The company's growing. What do we do?
And you're right next to LA Fitness Tukeetown?
We're just north of Tukeetown. I believe it's
48th and 48th in LA.
48th and Chandler.
48th and Chandler. So there's the Tukeetown LA
We're just
Fitness
north of there. So there's an office complex that has some dentists, some
behind the Waffle House.
north of there.
See, you're a professional golfer. Your friends will know LA Fitness.
And
My
Waffle
friends
House.
will know the Waffle House. You know, just
Back in the day, there was Hooters there.
Oh, that's right. I've been here 30 years. I remember the protest. Did you know when they rented the space, there was a protest march?
I remember when they were widening Chandler from 2 lanes to 3.
Oh my gosh.
They were
Yeah.
widening the overpass on I-10.
Right.
I don't remember the dump on Ray, but I heard all about it. So
Yeah. Okay. So what are the products that you're doing in Ahwatukee? What do you guys sell?
well, we have the traditional, I guess, lines of insurance that most carriers do. You know, we have our own. We do life insurance and annuity products. What I spend most of my time with is small businesses, small commercial policies. We do homeowners. We have a great homeowners policy that has a equipment breakdown coverage. So you have a business. Most business owners have responsibility for their HVAC systems, the mechanicals on their property. We offer that on our home product as well. So we have a quasi-type home warranty product built into our homeowners policy. We do renters coverages for people that don't own homes but are either students or moving to the area or as well. So I spend most of my time on the life and the business products. My partner Dave, he writes a lot of homeowners and auto insurance. DJ works with us in the office.
Okay. So you don't do health.
I have a health license, but I got out of it.
So you don't do health.
I refer that out.
What do you not do? Health insurance?
Health insurance.
That's about it. Okay, let's go back to the top. Life insurance.
Okay.
I'm a dentist, but I cherish out of hear patients talk for 30 years now. It's okay. The only question I hear on life insurance is what's the difference between term life and whole life, and is whole life a scam? And I don't mean to.
Sure.
I'm not throwing you under a bus.
No,
I'm just telling you what real people say now. Have you heard that before?
Yes, and I've also. So I get the sales side of it. You've got Dave Ramsey types that'll say buy term and invest the difference. Okay.
Dave Ramsey?
Dave Ramsey.
And who is Dave Ramsey?
Dave Ramsey is a financial talk show host.
Okay. And what are your thoughts on Dave Ramsey?
Let me give you the other side. The other side would be Tom Hegna. Okay.
Tom Hegna?
Tom Hegna. So he's been on
Hegna?
He's been on PBS, and he was a Army officer. Got into worked with, I believe, New York or Mass Mutual. Is a big proponent of whole life and the benefits of permanent insurance and some of the benefits, the living and the death benefits of
The one thing I've learned being 55 is it's never binomial. It's never yes, no, right, wrong, north, south. It's always 50 shades of gray.
So to get in the middle of one side versus the other, it's almost a political debate in a way.
Yeah.
as an agent side who's delivered a death check, a death claim, I don't care what kind you have, okay, as long as you have it when it's needed. There's yet to been a family that comes to you and says, geez, I'm really glad we bought this kind because of the financial aspects of it when their loved one passes away.
So you had those in Ahwatukee?
Not essentially in Ahwatukee, but since I've been here, I have helped deliver death claims. And, we delivered not me personally, but I think we did $174 million worth of death checks last year. People die, okay? And again, it goes, not to sound harsh, but when the tragedy, when that event happens, I'm more concerned that they have coverage in place rather than what kind, because the family has a tragedy. They've lost their loved one. Maybe they lost their husband who was the breadwinner. Now mom has 2 or 3 children to take care of, or one's in college and 2 are starting. How do we fund this? How do we continue to live and go through our lives? How do we continue to pay the mortgage? What are those aspects? The statistics show that, I saw it this morning actually, I thought somewhere that said 60% of the people have $1,000 in savings in this country.
Oh, yeah.
Right now. So if we lose the breadwinner.
So 60% of Americans only have $1,000 in the savings account.
I read it this
Which
morning.
means 2 out of 3 people live paycheck to paycheck.
Mm-hmm. And so what kind of insurance do you buy? I don't care. Okay. What are the odds that you're going to die? I hope they're small and tiny. I hope everybody listening to this lives a long, healthy life that doesn't have health issues, doesn't have to take care of a loved one, or doesn't have to take care of a family member, or sort of go through this situation. But I've seen it. I've got clients I have 2 clients right now that have cancer. One that will not make it, and one hopefully will. Neither of them have purchased life
Why
insurance.
will one not make it?
I shouldn't say he won't, but stage 4 type cancer. I won't say what. He's been with Mayo. They've given him a 3% chance to live past 6 months.
That's Senator McCain's odds. Did you know that?
I have read that about that McCain senator.
Well, he was on 60 Minutes.
But it's one of those things where he didn't purchase life insurance. We've talked about it over the years. He felt his church would help out. He felt other people would help out. He called up, I'll buy anything I can. It's those calls that you get when somebody passes you or somebody has something that we could have potentially done some work for that we didn't, that are the ones that stick with you. Like I said, my goal isn't to push one kind of a product. It's to explain both products. Whether it's a term product or a permanent product, there's many types of each. Each have benefits, each have some drawbacks. It's a question of what does the client want, what does the client feel the most comfortable with. Everybody has their own point of view that they think is correct, and the people do what's in their best interest. My job is to just explain both, answer their questions, and put coverage in place, as many people as we can, so that when something happens, it's there for them and we can bring them a check.
What are my Ahwatukee homies going to find at ChrisKamin.com?
Well, you're going to find my picture, unfortunately. And you're
Now,
going
was that your DUI mugshot?
No.
No, okay.
That
Just
was my glamour shot, I think.
That was your glamour shot? Handsome man. I never would have guessed you were a PGA golfer. Now in swimmers, I remember it was Phelps saying that submarines and aircraft carrier, anything in water is long and narrow. And he said it was Phelps has the most Olympic gold medals of all time. He said that there was a swimmer's body. There were no short, fat, bald guys that were Olympic swimmers. Do golfers have a body? I mean, I don't even know. Tiger Woods is how tall are you?
6'5".
Is Tiger 6'5" or is
about 6'1", 6'2", maybe?
But is taller, longer, skinnier people better golfers, or are there short, fat golfers?
I think a little bit shorter is better.
A little bit shorter?
Well, probably outside of a couple of people lately, the best golfers in history, Jack Nicklaus, Arnold Palmer, Gary Player, guys like that, were all probably 5'7" to 5'10".
Seriously? I'm 5'7", so you think I have a chance
With the
at the PGA?
Outside of 2 or 3 guys currently on the PGA Tour, your top players are all probably 5'10" to 6 foot.
Yeah. So there's famous golfers that are 5'7". I did not know that.
Arnold Palmer.
Arnold Palmer's only 5'7". That's a pretty short guy. Huh. Amazing. So yeah, when I don't know, I didn't notice that you were, I thought there's a handsome, charming man.
The website's going to have information about our company. It's going to have some basic information about quoting, our location, the products we offer.
So you do everything but health insurance. So she's driving to work right now, and she's married, and she has 3 kids. What are her top insurance priorities? Would it be her house burning down? Would it be her or her husband dying? What would you tell her top insurance priorities are if she has offspring?
Obviously, if she's driving to work, she has a car, so she already has auto insurance. That's regulated by the state and by the government.
And you do auto insurance?
We do. If she owns her home and she most likely has a mortgage, that person is going to have homeowners insurance. That's also going to be a requirement of the bank. Okay. If you own your home outright, you do not have to have it. We recommend it unless you want to self-insure in case your house burns down. You would build it yourself, but that's foolish. Why not? For $500 or $600 a year, transfer that over to the insurance company. You don't have to worry about building a $400,000 house. I think that's pretty obvious. If she's married with children, you'd want to look at and make sure that, hey, worst case scenario happens, let's insure against the worst case scenario. The house burns down, we've got that covered. Your car gets stolen or damaged in an accident, that's covered. You or your husband don't make it home from work one night, let's make sure that the surviving spouse or the children are covered. That's with life insurance.
And is there a formula on life insurance? Like, is it your income times a number, or are there any benchmarks that she should be thinking about?
There's different things in the industry. We've heard that you want 5 times or 10 times your income. Some people will say for every $50,000 of income, you'd want to insure it at $1 million. So if you make $100,000 a year, we're looking at $2 million. And if you're going to draw...
So on that first, you said 5 to 10, and then you said a benchmark for every 50,000 a million. For every 50,000 a million, is that the 5 or the 10?
Those are 2 separate benchmarks. Some people say just 10 times your income. That's what you want to insure for.
So Ryan, what's a million divided by 50,000? 20. But you said 5 to 10. But for every 50,000 a million would be 20 times earnings.
Okay.
And then you said another one. So it could be 5, 10, or 20 times earnings. How do you coach people on the difference between 5, 10, or 20 times earnings? Is it the age of the child?
Well, we'll do some basic things we'll talk about will be, okay, assume that we knew that tonight was your last night. Okay. How do you want tomorrow to be?
Don't make Ryan too happy.
How do you want...
You're going to make him too happy.
What do we want tomorrow to look like? Okay. Your children, okay. The first thing that comes up to mind is college. It's getting more and more expensive. Do you want your children to go to college? How do you want them to have the debt? Do you want them to take out loans? Have you saved money, either through 529 plans?
529?
Which are college savings programs.
And that's a college savings plan is called a 529 plan?
That allows you to put money in, and the gains are tax deferred, and the money can be used tax free if it's used for education. I
never heard of that. Is that a new thing?
It's been around for years. We do offer that on license and securities as well, so we offer those for our clients.
So a 529 plans, if she puts so much money in a month, it's pre-tax, after-tax?
It's after tax.
It's after tax.
It's after tax, but depending on what the investments that those are in, Fidelity offers one in Arizona that offers a tax incentive. American Funds offers one through the state of Virginia, which is a popular one. Most financial advisors can offer a 529 plan to their clients, but it allows money to be put in on an after-tax basis. It grows tax deferred, and when it's used for education, that money is all tax-free, the gain and the principal. Okay. So they can fund it over the first, when they're newborns, and over the first 18 years, there's a pot of money that grows there. It's available all tax-free.
So if you just had a newborn baby, this is 2017. If you just had a newborn baby today, how much do you think it would need for college, which you don't even know what it's going to cost because it's 18 years into the future? How do you plan 2 decades ahead? What are you coaching your clients in Ahwatukee today? For ASU, U of A.
Well,
I mean, we hope they go to ASU, but some kids aren't right in the head and have to go to U of A or NAU.
But if you're looking at it, anywhere from 150 to 250,000 per child.
Really, for 4 years,
for the cost,
20 years from now,
for the costs.
150 to 200. God, that's a lot of money. That's half a house.
If you're looking out of state, I mean, you're already. If you were to attend, one of my neighbors wanted their child to go to USC.
Is that because they couldn't get into ASU?
I think so.
You think so?
But it was roughly 60,000 a year now.
Wow.
It doesn't cost what does it cost to live and experience college in LA versus here? I went to school in Bradley, in Peoria, Illinois. The cost of living there was a whole lot less. I'm sure going to Creighton is a lot less expensive than in LA, or if you're going to go to New York for school, something like that. So a lot of it will depend. But we'll look at, okay, if we're looking at how we value life insurance for a client, what about the cost of the education? How much would you like the insurance company to take care of that for? Do you have a mortgage on your home? How much is that? Would you like that paid for? Or would you like some income coming in every month? How much income would you like coming in every month? Do you have some credit card bills, maybe some student loans, some car payments, things like that? Do you want that taken care of for your spouse? Do you want your spouse to have to go back to work on Monday because they're paycheck to paycheck and we have to have the money to pay the rent or pay the mortgage or pay the bills with the credit cards? If you're like all of that eliminated from them, give the family time to grieve, try to make sense of what just happened and move forward, or do you want them to potentially have to now sell the home? And if we're looking 10 years ago when we had a housing issue in Arizona, is it the right time to be having to force sell their house because they can't afford it anymore? Do they have to walk away from the house and go bankrupt? These are the things that we want to avoid. We want to give people time and money and the ability to make choices and decisions that are in the best interest of them and their family, rather than what, unfortunately, finances dictate for them.
When you started, I said, what do you not sell? And you said health. And I said, what do you do sell? And you said life, which would be term or whole life. Then you said annuity. I think most people listening don't know what annuity is. I mean, I'm a dentist. I didn't teach that in dental school. What is an annuity?
Annuity is you exchange an amount of money for guaranteed income. Okay, so the way it works is your own pension. People years ago would go to work for Kodak or Xerox or GE or whatever, and they got a pension. They worked there for 20, 30 years. They got a gold watch, and they got a paycheck for the rest of their lives. Currently, some teachers unions will offer that. Some government positions will offer that. If you're in the military for a period of time, you'll get a pension. And you'll get a portion of your highest years of income, and it kind of goes on. Most companies these days don't offer benefits like that anymore. It's just simply too expensive. So the 401k came along. People were asked to put money into that, but they were basically asked to manage their own pension or their own retirement on their own. It became challenging. What an annuity does is says, okay, somebody's worked for a period of time, or they inherited some money. I'm risk averse. Rather than worrying about how much I have and how much I can draw out of my account and when do I draw it and when do taxes come in and what are required minimum distributions or R&Ds, when do I have to take money, all these rules and the complexity of finance. An annuity, to an extent, simplifies that. Give us a piece of money, we will give you a check every month for the rest of your life or for a period that you determine that you want the money to come in. That is basically what it does.
She's driving to work and she's probably thinking, okay, for every $1,000 a month annuity, if I get $1,000, is that $1,000 gross and you take taxes out, or is that $1,000 net?
Depends on the product. Depends on the length of time you've had growth. How long that there's.
So
When we look at annuities, we have
What makes
break into two
what makes an
different
annuity
kinds.
kick in? That you turn 65?
No, there's usually two phases to an annuity. There's what's called the accumulation side, where you put money in either in a lump sum or every month you put some money into it, and then that will grow and they'll be credited with interest. Okay, what type of interest? It depends on the kind of product you buy. Whether it's index, whether it's a variable, or it's directly invested in the market, whether it's a fixed rate, where they just simply give you some rate for having the money. And over a period of time, that money grows and grows and grows and grows and grows. Some of it is the basis, which is what you put in. Some of it is the gain. Okay, and the tax rates are determined on a number of factors. It's not a simple product, but the concepts are simple. And as that product grows and grows, it accumulates. Okay, there's a time when maybe you hit retirement. Okay, and you say, I'm done working, but I want income to keep coming in like I had when I was working. That's when the product becomes annuitized. Okay, and you stop from growing to paying out. And we take what's called the benefit base, which is the amount of money that's grown from your payments plus the interest and the compounding over time. And we look at that, and we look at how long do you want the money to come in for, if you're married or not. So if it's a single person and you want it for 10 years, we'll take that and divide it out, and we figure out based on mortality rules and age limits and things like that, how much you will get. If you want it for life, if you want it for you and your spouse to take it, and if you were to pass away first, your spouse will continue to get it until she passes away. They can be designed where it will skip a generation and you have it and then leave it to your children or grandchildren. You can continue to go on for many, many, many years. But again,
they can go to chriskamin.com and just custom make an annuity. It sounds like. She can say, I'm 25, I have one kid, she can put all those variables in pretty much?
You can, annuities are more of income products rather than accumulating products, okay? There are products in the annuity section that will grow and give, we have one that will give us 7% guaranteed return every single year, risk-free.
It sounds a little, when it's guaranteed every year risk-free, it sounds a little Bernie Madoff.
The only...
They said all
the catch to
the experts said
those products are this, is that when you always have two options with an annuity. Okay, you put money in, it grows for a period of time. After a certain period of time, you can decide, you know what, just give me all my money back. I'm going to go buy a restaurant. I'm going to go buy a piece of real estate. I'm going to cash out. I'm not going to annuitize it. I just want my money back. You're free to do that, and you'll pay tax on the gain. Okay. The second portion would be if you 100% know that you don't want to do that, but you're buying this product to take the income in the future. You can purchase a rider. Our products, other competitors' products have very similar products where they will guarantee you an accumulation rate of 6%, 7%, 8%. Our product happens to be 7%. Guaranteed, 100% guaranteed. No matter what happens in the market, you'll get 7% every year contributed to what's in your account. And at the end, you will know exactly if you say, I'm going to put this money in now. 15 years from now, I can tell you, Howard, this is what you're going to have. And this is what your payouts are going to look like 15 years from now. And if you want to draw some extra up front because maybe you want to go on a big cruise with your wife, take your kids and your family with to start your retirement as a party, and you want to draw a little bit extra first, and then we show you then what the remaining balance looks like, how that's going to pay out over the rest of your life. These can be created that way. But again, it's more of a product for the future rather than as an accumulation.
So you've been here 5 years, and in 5 years you've added DJ, Dave, now Ashley. So you're growing. Mm-hmm. You're doing well. Is it mostly personal individuals, or is it in Ahwatukee, or is it small business? What is your mix?
I write a lot of small business. It's probably 2/3 of what my client base
is small business,
but what comes from small business is they know other small business owners. They're in the same boat, So we do a good job, we might get a referral from them. Often, a lot of times, a small business owner will own a home and some cars. Will come to us at a certain point and say, you know what, hey, you do a good job with this, will you look at this other part of my insurance package, which is my home and auto? Hey, I don't really have life insurance, maybe I think I should get some of that. I keep hearing radio ads for it, I keep seeing commercials for it. Maybe we need to talk about that too. So over time, I've built a business based on referrals from my clients. I found, through other advertising means, my number one source of business is referrals. My second source of business is meeting people and asking to
And
sit
your
down.
third source is this podcast.
Well, I hope it becomes my best source.
Well, I love small business because I'm a small business, and only 17 out of 100 Americans work for the Fortune 500, but it's all the news. Like, every time you go to the newspaper, they only have 4 stories: Facebook, Google, Amazon, Apple. But in Ahwatukee, what percent of Ahwatukee works for Facebook, Google, Amazon, or Apple?
Probably 1%.
Yeah.
I was at Google when I was up in San Francisco. I went to Google. I have a friend, I'm lucky enough to have a friend who works there, and he gave us, my wife and I, a 4-hour tour, and we were amazed at what they have to offer their employees. The facilities, the support, how they operate their business in terms of work-life balance, and the perks, I guess, they offer them as far as the food, the laundry, the services, the transportation, all these things that I've never seen before.
What is the typical small business in Ahwatukee? Are these actually small businesses in Ahwatukee, or do they live in Ahwatukee and they're in Chandler, Maricopa? Or
We have some. I have all over the state, honestly, but I have a number of businesses in Ahwatukee, Phoenix, Chandler, Scottsdale, Tempe, Glendale, all over the place. They do many different things. But
And
I
then,
guess
like,
the difference
when I
between-
say small business, like, what is a small business in your mind? Is it like 10 employees, 20, 25, $1 million a year in sales, 2 million, 3 million? When I say small business, what goes through your brain?
To me, small business means they haven't yet have all the systems. So the business owner is still hands-on. They're running either a portion of it or all of the day-to-day parts of it. They're there on the site constantly. They're doing many different tasks. At a certain point when the business is larger, they have more managers, they have more staff. Their job is to see more of a vision, more of a, is to manage the people rather than manage the business. So to me, the small business owners here, and like we're talking about with these big companies, Facebook and Google and Apple, if they make a $100,000 mistake, that's nothing. If they make $1 million mistake, that's okay. A small business owner can't afford to have a $100,000 mistake, or can't afford to have loss to their business or loss of the income from the business. And so that's one of the things that we certainly talk about with them is making sure that from the insurance side, if they suffer a loss, if they suffer a lawsuit, if they suffer something that's going to directly affect them and their employees, that we can step in and provide a check to keep them.
So when you insure a small business, you're not talking about the business burns down. You're actually talking about the guts of the business. You insure parts of the business.
Well, again, we went back.
When
I said earlier, I said, we sit down, we talk to clients. I said, what's your biggest fear? What's your second biggest fear?
Okay, I'll tell you what their biggest fear is. Their biggest fear is my patients. They have a company, and it has 15 employees, and they got 5 or 10 people back in the machine shop making something, but like one guy or maybe 2 does all the sales. Mm-hmm. And if that guy was ran over by a Mack truck, their $2 million a year company would go to $1 million, and then if the other guy quit the next day, they're gone. Mm-hmm. How do you insure?
Well, that specific example, will sound silly, but we look at what's called Kamin insurance. We look at
Kamin insurance.
We look at life insurance on this producer. When we have one person that's responsible for 60 or 70 or 80% of the revenue that comes in, either through sales, their connections, their visibility, they're the rainmaker, they're the one that makes the phone ring and the dollars come in.
The rainmaker, I like that.
Okay, that's the person that we need to insure, because if whether it's through another product we haven't talked about is disability income insurance. If that person gets hurt and can't work, they lose a paycheck potentially. The business loses.
Well, I thought that person could get disability on his income, but you're saying the business could get disability on that guy's
You
disability?
can get what's called business overhead. So
Okay.
we have a loss of a key person. We have a loss of something that stops the business. So the business owner the business owner gets hurt. Okay, let's say the business owner is this key person. Okay, that drives the sales. He has 4 or 5 or 6 or 10 people that work for him to do the processing. He's basically the guy that goes out and hunts, brings in the dead animal. Okay, he goes out and kills the bear and brings it in. His business, his staff, all of his employees, they're responsible for taking that animal, packaging it up, shipping it out, the customer service, all that kind of stuff. They don't have jobs. There really is no business without the person that brings in that business, right? So, but if they're one and the same, if let's say the owner gets hurt, okay, we can insure him with disability income. You can't hunt anymore, but we can replace his salary, which is no big deal. But what about the rent, okay, on the building that he has? What about his staff? Okay, what about the leases on computers and copiers and all those kinds of things? What about his insurance payment? What about all the costs that he normally has to run that business? That's business overhead coverage, which can be put in place. So in the event of a loss of income to that person, the business will continue to receive the money that it needs to keep its people from going somewhere else to a competitor, to keep his rent or his mortgage on the property being paid, to keep his insurance, keep his electric, to keep the leases on the computers and the fax machine and the copier, all that stuff that he has, those things can be covered. And so when we talk to we go back to talking to the business owner, what are you concerned about? He's worried about losing that person that brings in the income, or if something happens to me, how do I keep my employees from having to lay them off and having to go on unemployment? I don't want that. They don't want that. So, okay, we can talk about business overhead coverage. We can talk about different products that will alleviate the fears that they have. Because when you have a small business of 3 or 4 people or 10 people, you don't have $100 billion sitting in the bank like Apple does. When things go bad, you can just write a check. You have people's and those families' lives, and you're responsible for that. So that's one of the things that, that's really the important stuff. And it gets away from.
Well, I said that because that was just like here in Chairside. When you do mani-pedis or cut hair or do dentistry, you just hear people talking. But what are you here? What are they? I said they were most afraid of losing that key guy. In Ahwatukee, what are small business mostly afraid of?
It depends on each business, okay? Some people are worried about, what if my employee does this or says something, or gets on Facebook? What happens then? What happens if I'm more worried about an accidental accident on one of my properties? We have people that own multiple rental properties, or they own commercial real estate, and somebody gets hurt. Making sure that they're as protected as they can be. Each person, I always have this theory that people do what's in their best interest. You do what's in the best interest of you and your family. I do what's in the best interest of mine and my family. Each business owner is worried about a different thing. And my job is to make sure that we can take care of that fear. So they're.
I don't sell business insurance, but I always hear this term thrown around that they have an umbrella. Someone will say something like, my dentist friends in Ahwatukee, they might be afraid to, they'll tell their assistant, can you drive her home because she had laughing gas or she had sedation. You just don't want her to drive. So you tell your assistant, will you just drive her home? Well, what if the assistant got T-boned in the middle of Ray and 48th Street? So some people say, well, is there an umbrella policy just to cover all the weird, rare stuff that would happen to a business? Or do you have to line item go through each risk of that, what could go wrong?
The umbrella is excess coverage. It sits on top of the coverages that you have, okay? And it basically is there that if you have a catastrophic loss. So let's say, the example you just gave, if you sent one of your assistants to drive somebody home because they have too much gas, and instead of them getting T-boned, they T-bone somebody else, okay? That changes the whole talk dramatically. Because you sent one of your employees out they're probably in their own personal car or the client's car. You did something nice and kind, but you've opened yourself to liability. Okay, You're asking them to do something on behalf of your business, okay, which is to drive a client home, and they cause an accident. Now, your business is now liable for the accident. Now, if it's a small fender bender, that's okay. You could probably even pay out of pocket if you so chose. If there's an injury or even a death, now you're looking at larger amounts, lawyers getting involved. They're going to come see you and say, he's a dentist, he must be rich. I'm going to go after this guy. He has deep pockets. So in order to alleviate that section, we would want to look at those line items in your policy. Is this something that we would talk about when we're reviewing your coverage? Is this something that you have any of your staff do? There's a line called hired and non-owned auto. Okay?
Hired and what?
Non-owned. So non-owned means you're using, if you have a commercial vehicle, so let's say you buy your corporation, your dental corporation buys a pickup truck and you have it wrapped and you have my dental office all over it and you drive it around, but it's owned by the business and you use it in your normal day of work. That's going to be covered under commercial auto. It's going to be covered under the liability that your commercial auto has, which typically falls over from your general liability on your business. The example we just talked about where you send one of your assistants out in her own personal car, that's not owned by your business. You're asking them to do something on behalf of your business. Non-owned auto is a coverage that's added into your policy for the event when these happen, where if she now injures somebody, the liability that your business already has, $1 million, $2 million, whatever it would be, is now attached to this non-owned auto. So she, in the accident that is caused and the liability that's caused from the accident that you had her do on behalf of your business is now covered under your policy. Let's say in this accident that she caused, one of the occupants that she hit becomes paralyzed, down in a wheelchair for the next 40 years of her life. One person dies and one person survives. You know as well as I do that they're going to hire an attorney and come after you. Okay, and most likely they will find that what the limits of your general liability policy are. Maybe they're $1 million per year. Okay, $2 million aggregate annually. So you'd have $1 million for this event. They might try to say this is a $2 million, $1 million for the dead person, $1 million for the person that's in the wheelchair now. That's what we want to try to sue you for. The umbrella would sit on top of all of your liability, and if they were to exhaust your primary, which is your first $1 million of coverage, the umbrella sits there on top of it and would provide an extra $1 million or $5 million or however much you purchase. Thankfully, these scenarios don't happen that often. Okay, when they do, they're life-changing for everybody involved. You as the business owner, your employee who hit somebody, the people who were hit, the person who died. All life-changing for everybody. This can't unhappen. But if the conversations are had ahead of time, you understand what your insurance does, what it's currently not doing, maybe what you'd like it to do. These are the talks that we have with business owners. Okay, and this hired and non-owned auto portion might cost $100, $150 a year to add $1 million or $2 million worth of coverage on that for the business owner. So if you have somebody doing deliveries and they're not using a company vehicle, but they're using their own personal vehicle to make business on your behalf at your request, you as the business owner are liable for that. So for $10 a month, $15 a month, you want to cover that? When we have this conversation, the answer is, yeah, I need that. I have to have that. Okay. Versus my insurance company didn't do a good job. They wouldn't pay. They wouldn't do this. Well, insurance contract, all it is they're going to cover what you have in the contract. And they'll pay up to the limits of that contract. They won't pay more, and they won't pay for something that's not in there. So it's really important for a business owner or for a family to understand what their insurance is going to do for them. And at that point, my job is to help them understand what it does, what it doesn't do, give them options as far as what they'd like to purchase, how much they want to transfer that risk to the insurance company, and decide if that's the premium they want to pay for.
we talked about all the news on Facebook, Google, Amazon, Apple. When I talk to small businesses in Ahwatukee, there's only two nightmares they have. And it's not Facebook, it's not Google, it's not Apple, but Amazon has killed a lot of businesses in Ahwatukee. In fact, if you drive in Ahwatukee, you would think the #1 franchise in Ahwatukee is Space Available. And every one of my patients that lost their space is because it's sold on Amazon now. And every time Amazon grows $1 billion in sales per month, some other store in Ahwatukee is going to go under. Seems like the only stores left in Ahwatukee is where you need a human. If it can come in a box, you're kind of in trouble. But the other one, besides Amazon, believe it or not, I don't know if you ever hear this, is I've heard I've had patients cry about embezzlement. They actually had an employee, they had a business, they had a restaurant right here in Ahwatukee. And then they found out that the lady who was the godmother of their child's baptism was stealing them blind. Do you hear that? And is that something insurable?
It's definitely insurable.
But do you hear that ever, embezzlement?
No, luckily I don't. But that's certainly something that can easily put into the policies. A lot of policies will have a base amount, maybe a small amount of $5,000 or $10,000 of employee dishonesty or employee theft.
Employee dishonesty or employee theft.
It would be built into the most BOP or CPP, or not to confuse you with terminology, but the two different types of business policies are written on. Most of those will have some coverage built in there automatically for that, and if not, those can be added or they can be increased to amounts that satisfy.
Well, I think you're gonna hear that more because I've heard. I can give you the names of a few businesses in Ahwatukee that were shattered because of embezzlement. You know what one of them did? He actually got up on his roof and put cameras on his dumpster to catch one of his best employees at work throwing away stuff in the garbage, and then they close, and then coming back later at night at 2 a.m. and getting TVs and computers and stuff out of the dumpster. I don't know if that's a trend or if that's just a rare outlier. But so how do my homies contact you? Chris Kamin, CHRIS, and then Kamin is KAMIN. So Chris, CHRIS, like St. Christopher, Kamin, KAMIN. So they go to chriskamin.com. Any other ways to contact you?
Our phone number, 602-777-5101 is our office, or just stop in.
So it's 602-777-5101. And if you're driving from the foothills down Chandler Boulevard and you get to 48th Street, where do I go? I turn left?
Turn left and go north. And we're just north of the Tukeetown.
So would you turn into the Waffle House?
No, you'd go past that.
You go the second turn.
The third turn.
The third turn. The first turn is to the Waffle House.
Second turn is to LA Fitness.
LA Fitness.
Third turn would be Tukeetown or our complex on the left.
Well, hey, Chris, thanks for all that you do for Ahwatukee. And I'm sure that my homies on their hour commute from the foothills to downtown Phoenix found this informative, commercial-free. And thank you so much. I can't believe that on your day off, your Saturday when you should be home with your kids, you came by my house and just to talk to everyone. Thank you so much for all that you do for Ahwatukee.
Thank you for having me.
It was an honor.